Guys, SoFi shares, they are dropping after Bank of America and Piper Sandler downgraded the company to neutral. Oppenheimer also downgraded the stock yesterday. This is interesting, citing issues in valuation, management, and credit quality. Despite being labeled as a long-term winner, investors will be hoping to see some strength from SoFi's next earnings report here. This was one you flagged this morning here, but it's interesting because a lot of this still comes back to the expiration of the moratorium of student loan payments as well.
Yeah, the stock had surged, right? It had a huge run in the wake of that moratorium, or it's not lifted yet, but we know it's going to be lifted in the fall. That had been an overhang for SoFi, but the stock had run up so much that yesterday we had a downgrade, and then today we have two more downgrades from Piper and B of A, basically saying that it's a valuation call. Most of these calls do have to do more with the valuation than the fundamental case, Rochelle, that we are seeing for SoFi.
It's true. I mean, as we've been noting here, some of the outperformance they did say was warranted, but these valuations going sky high. But you're looking at potentially looking at interest rates at some point declining. I mean, that's going to help with better margins, make perhaps lending opportunities also look more attractive. So interesting to see these downgrades here. But I mean, it makes sense on the back of the fact that the Fed's saying, look, we're still going to have these interest rate hikes coming up, potentially two more at the end of this year. So really sort of a holding pattern here for SoFi at the moment.
You know, my mind immediately jumped to what does this mean for companies that analysts had come out and said, you know what, this student loan payment that's going to have to be initiated, that's going to impact them. I think of a Target here. I guess more long term, they could still be impacted. But yeah, I checked on those shares. They're still moving lower right now.
Well, Brian Railing was talking about that as well because it's not lifted. We don't know yet what the actual effect on consumer spending will be. But if I am somebody who has a lot of student loans, and I haven't had to pay them for a few years, I've spent that money on other stuff. As Brian said, those people probably did not take that money and put it in a money market account, for example, or in investments. It's likely that they spent it, or at least spent some of it. So now, as they're going to have to start paying it again, that's money that's going to come out of the bucket for consumer spending, as it were.
This feels too much like a personal attack. We're going to go to break, everyone.